Hey, what's up, ladies and gentlemen? Welcome back to the XForceGlobal channel. Thank you very much for joining me here today. Hope you're all having a fantastic weekend. It's my pleasure to be here on the weekend and talk about what kind of price action or updates we can kind of grab from the current price action from our last video as well. Are there any new changes or new structures that we can create? For the time being, not that I can see. I think that we're still working in a possible 1-2 narrative, just due to the fact that I like to work my thesis on kind of simplifying things and saying that this is a completed wave 3-4. And this here is going to be a new range of either the beginning of something to the upside, or we might be transitioning into a larger 1, 2, 3, 4, 5 to the downside. But that's not something we should be discussing right now because I like to again, stick with one side, and conviction is really important within this market, especially during this time. I'd rather be invalidated and be wrong and not know why I was invalidated rather than just kind of being bold and saying that we're going to the downside, straight to the downside rather, because I don't think that there's any in-betweens. I've discussed that there's a possibility of a possible double combo idea, but that idea is extremely rare. We haven't seen that for Bitcoin whatsoever. And this here, to me, is too large of a time for me to say that this is a wave 3-4 at this point. So if we're going to be sticking with the idea that a wave 3 and a wave 4 is completed, we should kind of ideally say that this here was the completed range and we're now working for a possible continuation to the upside. Again, if this is a 3-4, we're looking for that final fifth. We're looking for a 5-wave move up to the upside to complete a 5 of a 5 of a larger fifth of a larger third, and that, in my opinion, is going to be where we're going to see a significant retracement, where I would possibly become a little bit more bearish around the 80 to 85, 90K regions and start discussing what kind of pullback options we can have. Just like we've been anticipating within this region here, we've been looking for that diagonal playing out, and this is the retracement we've got. We are looking for that first strong retracement after especially a large impulse move completion of a fifth to of a third. Those are usually the best to trade if you are going to be looking for a swing trade for a short. But for right now, since we have done a lot of the retracement already for this current past week and a half or so, this move here was very controlled. Now, we were expecting a larger possible first actionary wave being created of a 5-wave move, but we didn't get that. Instead, what we got was we created a lot of overlaps within this current move here for the past week and a half, like I've said. And that, in my opinion, the only mode of correction that we can have, especially with all these strong overlaps that we are creating, is that we only can see this as a possible diagonal idea. And this current diagonal idea is looking like it's at peak validation. And now we just have to kind of separate ourselves in terms of where this diagonal is being positioned. So this first idea is, again, working with the first variation rather, is that we are seeing this 1-2 as a possible sideways movement. So we're utilizing this range here as a sideways movement, and this wave 1-2, we're seeing this C wave now concluding of this expanded variation flat. Remember, the expanded variation is when you create a higher B pocket zone against the origin of wave 1, and then we're seeing a C wave go against the terminus of wave A, or the termination of wave A, and we're seeing it now trade below this, and that's exactly what we're getting. We've gotten a rejection above this and we're coming back down. But again, all of this on the micro time frames is that we're seeing strong overlaps, and this does not look impulsive whatsoever. Now, this could be the beginning of something now that could lead us into a wave 1, and we would still look for a retracement to the upside if you're seeing this as a wave 1-2, and then you're looking for a wave 3. But for now, we're not seeing any evidence based on that. We're not seeing any real bullish kind of momentum or bearish momentum for the time being. So we have to stick with one side, and this is why I like to stick with a bullish idea for the time being until major invalidations occur. So for this flat idea, again, the only way I can see this is a possible ending diagonal for a wave C, and these are very, very common for expanded variations. We usually see waves come forth with kind of diagonals being in play. We've seen this happen time after time. This is one of those backtesting that I have personally done, and that I have seen a lot of diagonals play out for wave Cs of flat variations. So with that being said, the only way we can do it is utilize this move here up as the 5-wave move going into the origin of wave 1 if you're not seeing this as the origin of wave 2. Now, this is pretty much at peak validation. We are seeing the A to the C extension ratio-wise. We are seeing this as the possible 1618 target, and that is the most common target for an expanded flat anyways, and we are starting to get that kind of consolidation above that 1618 Fibonacci level, which is very crucial. Anything below, we're gonna really have to start talking about other bearish scenarios at that point, but there is one scenario that I'm going to be talking about that could bring us down to one more possible small low here. But for the time being, the evidence pertaining to this idea that no one really talks about is the divergences or the momentum indicators that come along with how these divergences are being created. Remember, divergences, according to the literature, is that you can combine this with the technique of using momentum indicators, most notably the RSI or the relative strength indicator. If you haven't seen my relative strength indicator video, I think 4 or 5 videos ago, I created a 3-minute video tutorial on how you can talk about the divergences being played out. Those are very important, ladies and gentlemen. That's one of the most common indicators to be using along with Elliott wave theory. They're very, very important, especially within diagonal. So this is no real perfect time to talk about it. I think right now is the perfect time to talk about it, is that we're seeing strong divergences being created. Even though the candle is not being perfectly met, we are still seeing the indications of divergence be created depending on which level of divergences that you're looking at. So for this current divergence, we are seeing divergences being created all around for how this diagonal is also playing out. So to me, that is an indication that this is going to be looking for a strong reversal, at least for the short term. Now, diagonals, the most strongest characteristic of a diagonal is a strong reversal, right? That's what we're going to be looking for. We're not looking for a corrective move to the upside in terms of a new price extreme being created, because we did originally have our diagonal as such, where we had waves 3, 4, and 5 being created here, where wave C has ended here. Usually this is not characteristic of a diagonal, where you have a creation of a finished diagonal here, and then you work for a wave A, B, C to the upside, and then we have a reversal. This, to me, creating a new price extreme against a large diagonal, that's usually the lowest of the probabilities. That's not how we should be playing our diagonals. Rather, what we can do is extend our diagonal and say that have our diagonal now being completed with this low here. So usually you don't want to be creating any orthodox bottoms or tops within diagonals. Usually that's only when you have some kind of truncation involved. But for now, we don't have any truncations involved right now at the time of recording. Right now, we should be labeling the furthest point of the diagonal as the completed diagonal. And now we should be looking for a strong reversal, because the characteristic of a diagonal is at least you want to see 50 to 61.8% of the diagonal being retraced, possibly even the whole diagonal in itself, just like what we've seen over here. We've had this large diagonal, or assumed diagonal of a wave 3, and usually you want to see the retracement at least to the previous subwave 2 or 4, depending on how deep of a retracement you're looking for and the extremity of how deep the retracement is going to be. But for the time being, right now, we're expecting at least to test the first level of the 38.2%, the 50%, and the 61.8% of this retracement from the swing high to the swing low, if this is the assumed bottom. Now, the 50%, remember, the 50% zone is just a 50% zone. It's not a common target. It's just the 50% retracement. It's not a golden zone. What you want to be looking for is the golden zone of the 61.8% and the 78.6% and the 88.6%, and those are all common retracement targets after a diagonal or even a wave 2 or a wave B. Especially those are common targets within the cryptocurrency markets. So with that being said, we're going to be looking for at least a strong reversal to the upside. I would say this is at peak validation. Remember the A to the C Fibonacci extension in terms of the Fibonacci ratios of A to C to first of all, we want to be looking for a 101 if it's a normal flat. Usually for expanded flats, you'll see the most common one being the 1.618 of the target as the for the wave C being completed, or the termination of wave C. So for now, I think this is the termination in my opinion. I think we will be getting a move to the upside if we're sticking to this narrative that this 1-2 has completed. Now, the only difference between this idea and the possible leading diagonal idea that I'm going to be talking about in a moment is that either we work up as 3-wave move for a possible equality 101. That's the first level that we're going to be looking for, depending on which Fibonacci level we do get stopped at. And then if we see this break up even further, then the 1.1 1.618 is going to be the next common target for that, and that will be the characteristic of a possible wave 3 breakout of this internal degree, and that'll help that extension to be creating for that primary 1, 2, 3 for the coming weeks or so, if this is going to be the case. So this idea to me, I think by our next video, we can stop talking about this idea and start talking about what kind of further advancements we can make to the upside, because I am pretty tired of this range as myself. But again, we have created a pretty textbook expanded variation of a flat idea, and just wave C is ending as a possible diagonal finished move. So our next idea is now utilizing this diagonal just a little bit differently, but it's going to be using it as the contracting leading variation, where we're now working with the idea of depth and time, where we may not be ready to move to the upside just right now. Subsequently, we're just looking for that rejection at that 618 Fibonacci level, as I have indicated here. And if we do get that rejection here as a three-wave move, especially if we start creating equality within the A to the C wave, within this internal B wave, then I think that this rejection here is enough to say that we might be going for another move to the downside for a wave C. And then that'll help us retrace down to the golden zone of this move here to this move here, from this swing high to this swing low. So if that happens, then I think that this ABC, or idealized zigzag, is the idealized scenario that we want to be looking for a possible wave 2 retracement of a deeper one. Then we can look for a possible move to the upside. And from there, if it moves further, I don't think that this is going to be, again, a double combo idea. We just don't work with that idea because, like I've said, it's very uncommon of having that. We've seen it time after time. Even the highest of Elliottians have tried to predict this. It doesn't work. I'm just going to be bold here and say that just from backtesting, there has been no double combo within Bitcoin's price action, just due to the fact that distribution patterns work in bursts, which means that we are looking for this as a completed 3-4, or this is going to be still going back to the idea of a possible 1-2 idea, and this is going to be possibly not utilizing this as the expanded flat, but as a deep wave 1-2, and then this can be a 3-4-5. This could be the beginning of a leading diagonal into wave 1 of that wave 3, 2, 3, 4, 5 to the downside of a larger 3, 4, 5. So that's the way we should be kind of organizing our scenarios. I don't think that this bearish scenario is going to be playing out for the time being. Like I said, we're just working with two very simple narrow down scenarios that we've completed the trend for a wave 4 correction. This move up here, depending on how the impulse is located, all you have to do is now work with whatever wave origin of a wave 1 is going to be located, because these two zones could be either the wave 1 origin. And right now, to me, this idea is also in play, and until this becomes invalidated, then we can start talking about it and shift to a bearish idea. But it's quite impossible to kind of position yourself right now, because there's too much risk. I think if you're using risk-reward management and risk management strategies within your trading, which you should, is that it's too early to short, in my opinion. And I think that we should get more data once we start coming up to create some kind of B wave. We need to fill some kind of void here. If we move down now, I don't think we're going to be stopping here. I think we will be moving further down, and it will be a lot more bearish. So I'm going to call that right now, and it will be a lot more bearish if we do start breaking these levels here, especially that 618 Fibonacci level. I don't think that there's going to be any in-betweens, and that's why we have to just use conviction, stick with one side. And my conviction, as hard as it may be, is that I just have to stick with a bullish idea right now, because this move here is just more consolidation than anything else to me of a larger time frame. Again, this doesn't look like a double combo again. This is just way too large of a possible 1-2. I can't fit a larger 1-2 of apparent degree. I don't want to say that this is a wave 3-4 of a larger degree. It just doesn't fit. I guess it can. But again, I just think that we should be focusing on the simplicity of the wave counts, because they usually develop into something else. So with that being said, those are the two kind of 1-2 ideas. Now we do have a possible one more idea of a deeper retracement that just kind of disregards time, which is a possible WXYXZ. Now, I don't like this idea. I don't like WXYXZ's ideas in general, but we can have a valid one because we do have simplified zigzag family ideas possibly being created. All we're just doing is waiting for one more possible move to the downside for a Z, because why not, right? Because every single move here was corrective, and with each preceding wave, it just failed to either move to the upside or it failed to move to the downside. And I guess 4 out of 5 times, if that happens, then, or 3 out of 4 times, or 4 out of 5 out of times, then this triple zigzag idea could be coming into play, and we could be looking for one more mini zigzag or simplified idealized zigzag to the downside for wave Z, and that'll help us come down to the 618 zone, and that should complete our overall wave 2 as a deep 1-2, and then move to the upside. In fact, this idea would be perfect if it were to play out, but again, these ideas are quite low in probability. The only way I can kind of give any real use case study is that this whole bear market that we had from 2021 all the way to 2022 is that this is the only way we can count a possible WXYXZ as such. And that's the only way, if you're going to be labeling this as a possible 1-2 of the primary to have a larger macro perspective, because this does not look characteristic of an expanding diagonal. Although I would love to say that this is a 5-way move to the downside, it just doesn't fit in for a bullish narrative. If you're looking at this as an expanded flat, I guess it could work, because this, I like it as an impulse. However, since we've gone up so much that we might as well just say we're bullish at this point, right? So if we're saying that this is a 1-2, then this move here has to be labeled as a WXYZ. So just keeping things simple, going back to the case or the point is that, you know, it's not super uncommon, but it's not common as well. So this is just an idea that we can keep in mind, and we will know in hindsight if this will play out, especially if we get supported at the 618 zone. So in summary, ladies and gentlemen, nothing too much to update in terms of the wave counts. I think right now, for the time being, is that we're still working in either a sideways 1-2, where wave C is finishing as a diagonal. Again, go back and visit the idea on my video on how the RSI works, and then go back to the literature of the Elliott wave theory or the Elliott wave principle. Usually you'll find momentum indicators have divergences applied towards these diagonal ideas, and that's what we're getting exactly. Now, also the other idea is that leading diagonal, where we're going into wave A, B, and then C, and that'll be the larger depth plus time of 1-2. This would be the more rational approach. Again, we're going to be determining that based on how this three-way move to the upside for wave B is going to be portrayed. I don't think there are any in-betweens. I don't think we need to focus ourselves and talk about how we can extend this idea for WXY. I think too many people are applying WXYs within their scenarios. It's just becoming a meme at this point. Keep things simple, ladies and gentlemen. I think keeping things simple will have a far higher hit rate than anything else. It's just my personal experience. Again, and that also boils down to why we should be removing that idea of a WXY double combo idea as well. So hopefully that was helpful, ladies and gentlemen. Thank you very much for joining me here during the weekend. I will do my best to update more ideas. I do have a lot more videos coming up for altcoins, more educational content coming. Remember, I am also creating or I'm almost done producing the videos for the Elliott Wave series. Those are going to be extremely fun. They're going to be very friendly, very easy to understand, kind of narrowing down everything that I can from the principle itself, major Fibonacci rules, not too much focusing on the Fib times, because Fib times, I think they're useless in my opinion. Again, but we do have a lot of educational content coming up. But the first video that I've shared a past few days ago is based on the RSI. It's a 3-minute video. You can master that idea, the RSI technique, and apply this to the diagonal as well. So yeah, if you're not in my XForceGlobal Discord membership, please do feel free to reach out to me. The link is in the description below. And also, if you're not following me on social media, I do a lot of daily updates on there as well. A lot of thinking out idea posts and so forth. So please do follow me there on X, formerly known as Twitter, at XForceGlobal. Thank you very much. I'll see you guys in the next video. Have a fantastic weekend. Bye-bye.